Alright everyone, welcome back to the channel for another update on DogelonMars, ticker symbol ELON. It's been a little while since we checked out ELON, however, looking at the charts in the past couple of hours, I've noticed a very specific level and a bunch of bearish indicators that I have to run through with you. I'm going to mention a very specific price target. Where do I think we're moving down to in the short term? Let's find out in this video. Well, let's start off on the daily time frame and let's draw from our lows all the way back down here in June when Bitcoin made the quote-unquote 17,600 bottom. I say quote-unquote, if you're new to the channel, warm welcome. I don't believe that 16,700 was the bottom, but I do believe Bitcoin's coming to take that out. Also looking at some leading indicators for the next move in ELON. Looking at Bitcoin on the 1 hourly time frame, we're breaking to the downside of this bearish pennant with a price target of 17,300. I think that's what we're coming down for. You can also see the oscillators. I won't dive into all of the oscillators, but a lot of the oscillators are heading down like the stock RSI with a little bit more room to move to the downside. Total altcoin market cap looks like it's got a lot more room to move to the downside. And with that being said, this is all happening while ELON is sitting on its 786 Fibonacci, the absolute last line in the sand. If you're wondering where this level is, it is at 2700 approximately. Obviously, I won't mention all the zeros before that because we will be sitting here for days if I mentioned all of my price targets with this. Now, another thing I'll say is, yes, we are currently sitting on this right now. It does not have to break down today. I am not per se predicting we break down today, tomorrow, this week. It can happen Monday, it can happen in a few days. I just want you to set your trade alerts on TradingView, put a horizontal chart, put a horizontal ray over your chart. As soon as the price breaks down from this, you will want to know, because if we do close a daily candle body close beneath that 2700, we're going to be magnetized to lower levels. On the daily time frame as well, you can see that we are coming into this support as the stock RSI starts to plummet. And if you look at the last couple of times that the stock RSI has been calling for these juicy pumps to the downside, you can see here, beautifully called a decent amount of the rally to the downside already. Here it would have called a beautiful rally to the downside as well. Here, beautiful correction here with a higher low, but nonetheless, and this one as well was extremely brutal. You might be looking at these and, you know, looking for higher lows, lower highs, whatever you're looking for. It doesn't particularly matter. All I really want to highlight with this is not the market structure, but the fact that every time the stock RSI seems to be coming down, it at least breaks through this 20 level, and in fact the blue line often heads down to about 12, 5, 0. But with that being said, it looks like the daily stock RSI has a lot more room to move to the downside. Now, one of my favorite ways of trading ELON thus far, and trading altcoins in general, has been looking at the trend using EMA ribbons and also higher time frame Heikin-Ashis. I feel like you could navigate the market solely based on these, and let me show you why. Let's see. Weekly time frame, you don't really come to the EMA ribbons. Daily time frame, you do. So let's look at the daily. Quite recently, we came to the EMA ribbons here, got rejected. Before that, we got rejected here. Before that, we were getting rejected here. Before that, we were getting rejected here. Before that, we were getting rejected here. And then if you zoom out, you can see, you know, you had some scam wicks above this, but you got, let's ignore the scam wicks on this one. Let's just look at times where we've clearly come into the EMA ribbons, and the EMA ribbons have been the undoubtable reason why we've come back down to the downside. And you can also see we got rejected here and move lower, rejected here and move lower, rejected here and move lower, and then obviously this was when we actually crossed bearish for the first time. So this wouldn't be a data point, this is really the onset of this. But really what I'm trying to highlight from here is, yes, I mean, if you're looking at the lower time frames, you might find times where, you know, you have a downtrend, and then in the immediate short term you do rally back up and make a higher high, and you might be thinking, oh my god, you know, a higher high, now we're bullish. But then every single time that happens, you almost immediately rug to the downside. I just want to show you the trend. If we're drawing a line of best fit through these data points, the EMA ribbons are clearly a strong line of resistance. And what I really want to say with this is, I'm highlighting this because this is basically saying if you've been DCAing, you haven't been doing a good job of navigating these markets. So another way of saying this is look at the weekly, and I'll explain why I don't think that people should have been DCAing up until now. Why? I mean, if you look at the charts, it's fairly self-explanatory. I've said this opinion many times, but people on this channel for the past couple of months, I've been calling for much lower price targets on many cryptocurrencies, and people have religiously been telling me, you know, you need to DCA, you need to DCA on the way down, you need to buy every dip on the way down, otherwise it's going to eventually just have a rocket to the upside, and you're never going to be able to buy for cheap again. However, However, I had a different perspective because I did that in 2018. I listened to what retail said. Everyone was saying buy the dip, DCA, DCA. That is the whole narrative. Everyone always says DCA, it's a great idea. But I did that in 2018 in the bear market and it wasn't a good idea. It was a terrible idea. So don't listen to retail traders. Make your own plan, and that's exactly what I've been doing. And I've been letting you know my plan, and my plan highly relies on market structure, market momentum, looking at things like these EMA ribbons, looking at the trend. Are we still clearly in a downtrend? Are we below these EMA ribbons, which we are at this moment in time? And then you look at things like the weekly Heikin-Ashi candles. You can see we're miles below the 786 Fibonacci. The trend has clearly been invalidated, even if we're drawing down to the candle body close. In fact, the candle body close is a lot more vivid with this, because you can see this beautiful breakdown, test of the 0.5, rejection from the 382, break back down, bounce back up, rejection from the 0.5, break down, didn't really come up to the 618, but you did fall below the 786, confirmed it about a month ago, and now we're heading back down to take out these lows. So it's super clear to me that we're coming down to take out these lows, and one of the things that I'll be looking at when I do start DCAing Elon is I'm not going to buy the exact bottom for Elon. I don't have a crystal ball. I don't know where the exact bottom is, but what I will be doing is I'll be looking at the EMA ribbons, waiting for a breakout on the daily time frame with a volume confirmed bounce, with Bitcoin also looking like it's regaining strength, and I will be looking for that in tandem with the weekly Heikin-Ashi candles starting a strong uptrend. If we head over to the monthly, you can actually see, if you're slightly more conservative than me and you don't want any chance of buying while we're still in a bear market, potentially look at something like the monthly Heikin-Ashi candles. But because these open approximately, not exactly, but because they open approximately halfway through the previous candle body, it smoothens out the trend and it takes a lot more momentum to the upside to make us fake out. So for example, if I come over here, you can see there have been months where we've been bullish, and then if I come over to the weekly, you can just see it's been green, red, green, red, green, red, green, red, green, red. Not really too many clear directions, but then you head over to the Heikin-Ashis and it really smoothens out the trend, really takes away a lot of that emotions. If you do find yourself still struggling with emotions in the markets, nothing to be ashamed with. When I was in my first cycle for cryptocurrencies, I was an emotional trader. Not anymore. All of these breakdowns and blood in the streets has turned my heart into stone and turned my mind into the mind of a robot. So these swings really don't affect me too much. So when I'm looking at this, I'm looking at this in the most unemotional way possible. I do like Elon. I'm a fan of this project, but right now it does not look like the trend has changed. It does not look like we're sorting out a double bottom. Volume is not coming in to confirm a new break for Elon. As you can see, we did, because this is a low market cap coin, when volume started rolling in for this, we really did start gearing up, but right now it's just not there. So my friends, I'll be letting you know when I do think is the perfect time to buy Elon. At this moment in time, I don't have a specific bear market low price target that I am 100% going to stick to and abide by. So I'm not going to lie and just mention a random target or mention a target that I think it could bottom at. I'd rather let you know closer to the time, when we get down to this region, what I think the next move is. But I do not see us bottoming above this region, and I think we're going much lower. The reason for that is if we do come over to the total crypto market cap, I'm really not going to go through all of the altcoin cycles and total crypto market cap cycles, but no matter which ones you're looking at, we never bottom above slash at the 786 Fibonacci when you are drawing from your lows to your highs in your market. So this market structure, I do not think that the total altcoin market cap will be bottoming above the 786. I think we'll be breaking back down beneath this. The next line of support I see is a tiny region round over here, and this would say, hey, you know, the altcoin market cap has about another 42% to move to the downside. Considering how the altcoin market cap has not moved whatsoever today, and considering how Elon has been much more of a volatile mover in the past couple of days, I would be saying that I'd be saying that if the total crypto market cap has a 42% move to the downside, I'd be saying Elon is likely to have about a 50 or a 60% move. So this could be a level that I do have my eyes on for buying, which is once again why I said this is a low market cap coin. This is very volatile. I'd much rather be buying the breakout of this when it looks like we're entering a confirmed bull market, because that is when I think these dog coins are really going to blow. But until then, DCAing hasn't worked. If you've been DCAing for the past couple of months, you know, take your emotions out of this market, you know, clean up the chart, put it on the Heikin-Ashis, and tell me, you know, at which point in this market from the at which point in the past 6 months has DCAing in this entire market structure worked? Now, you can say hey, you know, in 10 years time, when Elon is going to be trading at these massively higher levels, it's not going to matter. But with that being said, if you also do think that, it's not going to matter if you wait for the first breakout on the monthly Heikin-Ashi candles. That is what I plan to do, my friends. I'll be letting you know when I think that is, but in the immediate short term, I still see the next level to the downside being the level that I mentioned before, 37.5% drop. I unfortunately don't think we bottom here. I will be updating you when we do come down here. I don't even need to pull up the VPVR fixed volume profiles. I can really just look at this and tell that there has been absolutely no data traded at that first touch point here that I mentioned. And subsequently, if Bitcoin is still moving down past these levels, there really isn't support built out on the VPVR until much lower levels down here at 1.5. And we did talk about how we could come down to 1, which is a 60% drop. So 1.5 would be the first level of support actually here, which I said I didn't think there was volume traded at, but apparently there is a decent amount over here. So on the weekly time frame, there must have been some dailies that were traded for quite a while over here. But another 44% drop is my most conservative price target. And once again, in the immediate short term, I see us breaking down another 20%, taking out the lows, and then coming down 36% to these price targets at the bottom of this trend. That's all I've got for you today, my friends. It looks like Elon is going to be moving a lot faster to the downside. Everything we've looked at today, I don't think we covered the oscillators too much, but on the oscillators as well, things like the squeeze momentum indicator, things like the MACD, things, well, the MFI is already starting to turn back down, but the momentum indicators like the squeeze momentum and the MACD have not even yet flipped bearish. This is still in neutral territory. This is still in, well, it's in a bull uptrend, but it's just below the heartline. So I would once again say it's bullish that we're green and it's bearish that we're beneath the heartline. So this is neutral, and then the MFI is slightly different. We've come up to the heartline and we've got rejected, so it's likely that money is going to continue to flow out of this market. As always, my friends, expect more downwards volatility. I'll keep you updated on this. Cowboy out. Peace.